My name's Herman Man. I've been at Xero for about 2.5 years. My previous experience, I was at Microsoft for about 15. So I actually did a whole bunch of things on consumer, did a whole bunch of things on enterprise, did a bunch of things on Azure as well, all in engineering and product management. Basically, for those that know about Xero, know about Rod, he's essentially our primary founder and ex-CEO. And so had a conversation with Rod, and basically that really just changed the way that I was thinking about small business and the opportunity that we had at Xero to actually make a difference. So with that today, really happy to talk to you about cloud and services and how that's transforming SMBs. I think a lot of this will be known to you, but just walking through the journey of how we're thinking about things. So at Xero, we are very focused on small businesses, and specifically, we're looking at how to bridge and make small businesses successful. And we have a few things that we look at, but ultimately, as we talk to them, these are the fundamental two questions that they always ask, which is, will my business survive, and how do I actually grow my business? When you think about this is pretty astounding and alarming at the same time. They're very fundamental questions, yet questions that they don't have the right tools to go answer, nor the acumen to actually go answer that as well. And so when we take a step back and we're like, well, why do small businesses matter? They matter because there's a lot of them. There's 30 million small businesses in the US, depending on what source you actually look at, but 30 million is a pretty understood and agreed upon number. They actually create 2 and 3 jobs across the US, which is huge. And 95% of companies are small businesses. So very, very pertinent to the US market across all segments. Specifically, small business itself is one that is very important. And so when we look at the investments traditionally at small businesses, you start to realize what has happened. I think a lot of you actually know this, but money has traditionally been spent on the consumer side. So be it Facebook, Instagram, Google, they spend on the consumer, and on the far end, they spend on the enterprise. And they do that because that's the enterprise's pay, right? And it's easy to reach out to them. I mean, being at Microsoft, it was easy for a company to actually reach out to Microsoft to actually make a sale, and then you make it into a division, and then you land and expand, so to speak. With small businesses, they're all separate little entities, and it's very hard to actually reach and distribute to them. And so what has this meant for small businesses in totality? And the reality is they've been left with experiences that are less than ideal, right? They have aging experiences. Their apps that they do use aren't well connected together, and they've been basically left there to fend for themselves and to figure out what to do next. And so when we take a step back and we look at that a little bit more across small businesses, you start understanding why that is the case. I mean, like I said before, monetization is extremely hard with small businesses. Distribution and finding that scale factor is extremely difficult. They're often siloed and verticalized. So when you think about a small business, the software that works for a restaurant is very different than that for a veterinary office, is different for a medical practice and all that. And frankly, there isn't that cross-pollination that exists with enterprises. So when you think about an enterprise like Slack, for example, after I left Microsoft, actually, I moved down here. I worked for a company called Hearsay Social, if anybody's aware of them. They focus on social CRM. Steve Garrity, Clara Shai. So in there, basically, if you think about it, we weren't using Slack at the time, but if I was using Slack and I left Xero, I would cross-pollinate my experiences with Slack over into Xero, and there's a lot of cross-pollination with employees that move, right? And that essentially becomes your it factor when it comes to selling and bridging that relationship. That doesn't exist with small businesses today, and so therefore reaching them is that difficult. And frankly, when you look across small businesses, they skew older, and outside of Silicon Valley, often older means that they don't have access to tech, they're not familiar with tech, and so therefore the investment just wasn't there. And so while that is true for software, it's equally true for accounting software, which is where Xero is at, right? And so, true fact, 50% of all small businesses use accounting software. The other 50%, they use paper ledgers and they use Excel. So as much as we talk about the incumbents in this market around accounting, the reality is the incumbent is Excel and the paper ledger, and that's what we're up against. which then really makes sense when you start asking those two questions. Will I survive and will I grow? They're using really antiquated tools to go run their business today. Just a few months ago, I was at it was basically a consulate event with essentially the Attorney General in New Zealand, and they were there, and I was at an event with them. And a friend of a friend actually runs a winery in Napa. Huge winery, makes millions of dollars. They are themselves still running on paper ledgers. So it didn't hit home until I actually heard that story. I had heard these stats, I could regurgitate the stats, but when I started hearing it in real life, I realized it's a real thing. And so while that is true for software, what is it for banks, right? Because the other equation is, while we have software, we got to look at the financial systems, and it's equally true for banks as well. When you look at banks across retail as well as commercial, that's where they put their money. So in the consumer, it's about getting consumers, getting loans, reaching out to that mass number. And then for the commercials, it's how do I actually go fund these massive loans for these bigger businesses. True fact, I mean, if you look at it and you look at the risk models, the cost to actually go manage a loan that is roughly about 100,000 is the same if you actually went to 1 million. So you have it doesn't take a genius to figure out exactly where the banks are going to go put their money, right? And that is with the larger organizations. And so as a result, small businesses across banks have really been squeezed and pinched as well. And so then in came fintech. And so fintech was the opportunity where they saw, look, banks aren't moving that fast, but yet here we are, we have this opportunity to go disrupt. So the fintech orgs came in and they started to try to innovate. And since 2010, we've had $100 billion spent on fintech. In 2017 alone, there was $27 billion spent globally, with the majority being in North America as well as the EU. Obviously, China is making a big splash now as well, so we're going to see more and more investments there. But fintech was really the answer. And so it became a fight between banks and fintech, right? And it was who's going to win. And there were so many people that were going to say, if you looked at the numbers, they said banks were going to go win. And if you looked at fintech, a number of them actually said, you know, the fintechs or the disruptors are going to come in, change the way that things are working, right? And so they got into this battle, so to speak. But the reality is after a while, fintech didn't solve the problem. Fintech alone, I should say, didn't solve the problem. They're great around innovation, and fintech is here because it actually pushes the envelope forward. But the reality is acquiring customers is extremely difficult, and so fintech realized that. They also realized in order to actually go, whether it be small businesses or large organizations, the trust factor wasn't there, right? And so, especially when you're talking about financial services, the brand, the awareness, the trust needs to be there for things to actually go click. And the reality is many startups just didn't have that. That's not to say that they can't do it, but it's a very hard road. And often what we hear are the success stories and not the failures along the way. And so that's what made it difficult. And then frankly, the regulatory oversight made it extremely difficult. So we often overlooked kind of what the regulatory oversight was, the compliance aspects of the regulatory bodies. And so what ended up happening was a partnership started forming between fintech and banks. And banks and partners started realizing that to coexist was something that was necessary. But it wasn't all rosy to begin with. I mean, there was a lot of just fighting back and forth in terms of the customer, who owns the data. There were often cases where banks would try to go acquire, to go squash the competition and so forth. But things started improving, and in 2012, what we started seeing across the board was First Data, was an example of First Data acquiring Clover. Don't know how many bankers are in this room or financial institutions that are in this room, but First Data is a merchant acquirer. And so what they do is they provide the infrastructure for small businesses to be able to go take credit cards. And so they are big. I think they made roughly about $12 billion in revenue last year. And so a sizable organization. They acquired Clover in 2012. So Clover is a point of sale solution. And what they did was they assimilated the technology, but they left Clover alone to actually go do their thing. And so in the classic build buy partner scenario, here they actually bought, but then they actually kept the loan as a separate product to go run because they saw the value there. And we're starting to see that pattern. In 2017, the same thing happened with Chase and WePay just up the street, right, in San Francisco. So a payments company, Chase acquired WePay, brought them in, left them alone. They're actually running, they're going to go innovate across the payment space there. They're actually using WePay as a tech hub as well to go attract more talent into Chase and into WePay itself. So you're starting to see these patterns all play out where they're starting to partner together. But that being said, this is what ended up, right? And so here you're looking at Wells Fargo. We have a partnership with Wells Fargo. We love them, right? So this is not us making fun of Wells Fargo or anything. But the reality is when you look across the landscape, there is a lot of choice for the banks to go partner with. There's a lot of choice for the poor small business to figure out who to go partner with. I mean, there are so many options there that we really have to do a much better job bringing this together. And so ultimately, as we talked about the evolution of banking and of software, did it really help answer these two questions, right? Will my business survive, and how do I actually grow my business further? And so when I came in 2.5 years ago, what I didn't realize was accounting would actually be this hub around this data. If you asked me 2.5 years ago, not being an accountant, not having a financial background, I would have told you that banks actually are that center. Financial institutions, fintech would be that center. But the reality now, after talking to numerous small businesses, is that center is accounting software, and it makes sense because accounting software is where all the income comes in, where all the expenses go out. That's where they see their true financials. At the same time, accounting software also gives them the full wallet. So small businesses have multiple bank accounts, and looking into one particular bank only gives them one sliver of the wallet. Accounting software actually gives them the full gamut of that wallet so they could see everything across that. And so I work at Xero. For those that don't know about Xero, just a quick introduction about who we are. We are a cloud accounting software focused specifically on small businesses. So we are the largest cloud accounting software outside of the United States. We started in New Zealand, and roughly about 10 years ago, was able to actually go drive that market and entered the Australian market, won that market as well, and decided to go into the UK, and now we're in the US. So we've been here roughly about 4 to 5 years now. Across the globe, we have 1.2 million small businesses. We actually have more. We are a public company in Australia, and so we're about to announce earnings. Can't really talk about the specifics there, but we are over 1.2 million at this point. We have more than 115,000 trusted advisors, so accountants and bookkeepers on our platform. And in terms of scale, we did more than 1.6 trillion running through our engine last year. So massive scale around what we do with Xero, which really gives us an opportunity to look at things globally, not only within the US when it comes to small businesses. And so our purpose is to have a positive impact by growing small businesses. Rod had this vision when he started. Basically, what he looked at was, look, here's cloud. Cloud is an opportunity, but small businesses are so underserved. How do we actually help them grow, right? And so he started from day one, just focused on small business. And our mission is a little different than the others. It's really to rewire the global economy, taking small businesses, connecting them to advisors, and connecting them to banks and one another. And so to be very clear here, how we look at ourselves is we are a platform. We've been a platform since day one. So we had open ecosystems for open platforms and APIs for anybody to actually go build into our ecosystem. That was our philosophy. As well as that, we basically want to empower the advisors to actually do more with their small business. We know, looking at the data, that a small business that is on Xero, after 5 years, there's an 85% chance that they are still in business and they're growing profit margins 23% more. The comparable stat, if you look at the industry, is after 5 years, only 50% of small businesses succeed, and they aren't growing that 23% more. So the stats here are actually quite alarming in favor of this, and that's why we've been very focused on connecting small businesses with accountants to actually go do that work. In addition to that, we also partner with banks. We don't compete with banks, right? We believe that for a small business to actually grow, which is that second part of the question, it's about getting access to capital. And our goal is to actually provide that data for banks to actually make that decision. As I chatted about earlier, it costs banks the same to actually go finance even a $10,000 loan as it does to go up to a $1 million loan. And so what we want to go do is actually share the data that we have because it's well curated because of our accounting ecosystem and everybody in there. We actually have rich data and share that with the banks to make these credit lending decisions. And so basically when we look at this, how it works, and take Xero for anything else with an accounting system, is you have in the middle, you have the single ledger where that is the truth. That is the truth of all accounting data that exists. So the income, the expenses that come into that system, that's all ledgered there. It's where it's shared between the small business as well as the accountant. We obviously have first-party apps and tools that we've built specifically around accounting. On the left with Xero Blue is what we call it, and on the green side specifically focused on advisors and accountants to actually go do the job. So that's where they live to actually help them run their practice, to help them go scale as they manage more clients on the Xero platform. But down below is basically that third-party ecosystem that I talked about earlier, where we are an open platform and we encourage apps to actually get built. And so a number of you, actually, I see app partners here as part of Xero attending this right now. And again, our philosophy is let it be open so that you do have access to that data to continue to go innovate and build things and extend the platform that is Xero. And so we have over 600 plus integrations today as just a testament to kind of our philosophy, which is pretty incredible when you think about our size and what we do, right? A small New Zealand company that started there all the way through into the US. We have 600 plus applications that exist in our marketplace today. So great story around the history of where we are with software, where we are with accounting, and then you start looking at banks. All great, but does it really help answer these two questions, right? And the crux of the matter is that we are starting to see this for small businesses. There are really cool apps that are enabling a lot of workflow across the board. So whether it be budgeting or forecasting with an app like Futurely, or payments with Veeam, right, for global payments to make that easy, we are starting to see that, but we're just there. It's nascent. And so when we look across this, the way that we think about it is, the key to addressing these are three things, and I'll go into these a little bit more. First is simplify financial management, right? Like make it really simple for the small business that isn't an accountant to actually do accounting. I'll go into that in a little more detail. Connect the apps to enable better visibility. So everybody in this room, I think that we actually have a responsibility to see how we can go better connect our apps together to provide that end-to-end experience around workflow and provide that flexibility for them to actually see their financials. And then the third thing is thinking ahead, right? And so while this is create interoperability through standards, what we're now starting to see is there's globalization across the standards, whether it be from the EU or from Australia. We could start linking those apps together so that they work cross-pond. And so when we look at the simplifying the financial management aspect of things, I think number one is automate and eliminate accounting. So even though we are in accounting, Xero is in accounting, if we do our jobs right, we actually remove accounting from the equation. What we often call is code-free accounting or invisible accounting is the way that Rod called it. And what that means is if we do our job right, the small business actually never needs to go back into the accounting system to go figure out how to go code expenses or code income. Doesn't have to do anything around bank reconciliation. Everything just happens. In fact, probably a real powerful thing is the ability to be able to just take bills in and source that all the way through the accounting system and have that get paid out, right, through this accounting engine. And it's a partnership through which this can happen because Xero can't do this all alone, but together, collectively, we can actually work together to go build that workflow. And so with that, in addition to automating, it's integrating the accounting with banking. And so again, I talked a lot about access to capital. That is one of the key things that we do want to go do. But the other aspect is we want to provide context for that data. So if a small business is in their banking portal, why can't they actually have access to cash flow, right? To see cash in and cash out and be able to go do that. Like we should be able to go do that across the board. And here's an opportunity for us to connect that all together. The second thing is related to this theme is connecting apps to enable better visibility. So the key is to go simplify the workflow between the apps. We're starting to see this right now, but you can imagine that if you started off with CRM, you're able to actually go invoice and from that do payments and collect payments, and then from that reconcile back all the way through your accounting engine and reflect that accurately in the CRM system itself. In addition to that, when you look across the board, there's things that we can go do around verticalization, right? There's like veterinary software that has specific practice management tools there. There's an opportunity to go connect that not only to accounting but to payments as well, so that as they actually make orders, when they actually make payment and invoices, everything is just seamless and it just works. And then as part of that, to go share the data between these apps, right? One of the key things that we can go do is by being on SaaS, obviously you guys all know this, we have the ability to leverage big data and to actually go drive this across the board. And so benchmarking and providing rich analytics specifically for specific verticals as well as segments is the opportunity here. And I think it's on all of us to actually make this happen. And then the last one that I'll say is looking ahead with interoperability. There are so many standards that are coming up now, and I think the way that we do this is by looking forward for the future. So rather than looking at what each of us can do and what we can go do through proprietary APIs, I think we have to go look further to think about how we're going to go interoperate with everybody globally. And so when you look across this, obviously GDPR is about to go launch at the end of May. It was already set 2 years ago, but it's going to be enacted. And so that's the data protection policies that exist in the EU. And they started with a mindset of, look, we got to go protect consumer data. They have that data. And so their goal is to actually make that be a standard of which other countries can now start interoperating with. And it's something that I think we have to go look at as we're building things, especially if you're in this area around customer data. The other example I have is around e-invoicing. So when you look around e-invoicing, in fact, I was part of an assessment group here to go see whether or not we want to do something in the United States. There is e-invoicing that started in EU with PEPL, as well as in Australia with DBC. And the whole idea is if we can actually go standardize on an e-invoice format, because the majority of most invoices today actually still come through paper. If we can actually go standardize across this, there's goodness not only in the downstream workflow, but there's goodness just around the data that we can actually get and share between us. And so this gets back down to the purpose, right? And our purpose is to have a business, to have a big impact by growing small businesses. And I actually do think that the opportune moment is now. If you look across just 3 years ago, roughly about 50% of all small businesses weren't on SaaS, right? Now when you look at the stats, 94% of small businesses plan to use SaaS and 85% plan to invest more in SaaS. This is just 4 years, right? And so this was taken at the end of 2017. By 2018, these numbers will even be higher. We're at this point where, you know, when I talked about earlier, when the demographics, when we talk about the culture of SaaS, everybody is just used to their mobile phones. They're used to using Gmail, using Facebook and all that. And so no longer is there a divide between the uncomfort of data living in the cloud versus on a server, on-prem server somewhere. They basically have become comfortable to this, and you're starting to see the stat. The other interesting thing here is that baby boomers are retiring at 10,000 per day. This is a verified stat. It was somebody in government had actually quoted this, and they did a whole bunch of research around this. And the truth is 10,000 baby boomers are retiring per day. And millennials are starting businesses earlier at 2 times the rate of traditional startups. And so huge opportunity for us. And so I talked about kind of the different opportunities that exist. And today, really, really excited to say that small businesses have a lot more access to applications than any time before. When you look at the startup landscape, like I had talked about earlier, the investments being made across small businesses, you see all these different apps. But the reality is most of these apps still don't talk to each other. And so if we're going to help small businesses actually get together, what we need, or to thrive, what we need to do is we need to get together to make sure that we build the interconnectedness to make things actually happen end to end. And so for me, I actually think that we need to and we can actually work together to make this a reality, and we should. And so the last shameless plug here is that we do have the Developer Roadshow at Xero. We run this in 2018. In 2017, we were running this again in 2018. This is coming in San Francisco on June the 26th and in Denver on June the 28th. And our goal is to really to connect the ecosystem partners together, whether or not you're a BD person or a developer or a product person. The opportunity is to bring everybody together and to really see how we can better interconnect. So that's it. So thank you.
Great. Thank you so much, Herman. We have time for a couple of questions. Anybody have a question for Herman?
Yeah. Yes, I'd like to add, you talked that you'd like to provide better access to capital. I wonder if you had any idea of what that wants to look like.
Yeah, so the question is better access to capital. What does that look like in the Xero environment? And so for us, to be very clear, we don't want to be a bank or actually lend, right? We want to go partner with financial institutions to actually go do that lending. The problem to date has been that the data that the financial institutions use often is stale, right? And often very manual in terms of how they retrieve that data. And so what we want to go do is create a pipe where they actually have real-time access to data so that they can go make the right credit and lending decisions.
Right. Makes sense.
Yeah.
So clearly you said 50% paper, 50% using software, things like that. We're construction tech. We're T-Sheets for construction. Paper is our biggest competitor. How do you think about that from a product perspective? Are you trying to get people off paper, or are you waiting for the millennials that are ready to just adopt and not use paper?
Yeah. So the question is paper, 50% are still using paper today. So what's our strategy? Are we going to go wait for the millennials? Sorry, I didn't sleep much last night. And when I don't sleep, I slur. Not a great attribute. So I apologize for that. Are we waiting for millennials to actually go enter and force, right? Are we going to go do something about that? I actually think that it's a two-part story, right? I think over time, what we'll see is as millennials do enter the workforce in more leadership, ownership type positions, things will change culturally. That being said, I actually think it behooves us as Xero to actually create that unique experience to get them on. I think the reality today is they look at it as, look, it works. There's no reason why I should actually go get on Xero or any sort of accounting software, right? Because what they're using is good enough. And so for us, it's finding that hook in terms of, well, if you do this, you could go interconnect and do all these other things. And I think what's interesting across that is when you start looking at the payables opportunity, or when you start looking about cash flow and how they can get paid faster, that becomes material to them. And only are they able to go do that if they actually come online and get off of paper. So it's really providing that value add for them.
All right, super. Thank you so much.
Great.
So I imagine if anyone has other questions for Herman, he'll be around for a few minutes. Happy to answer them.
Yeah, I'll be at the back there.
All right,
Thanks
super.
a lot.
Thank you. All right.